Welcome everyone. So today we're just going to build upon what we started last week. Last week we talked about crypto 101, which was the very basics of what cryptocurrency is, what the blockchain is, why we need the blockchain, the advantages and disadvantages of the blockchain, and what use cases the blockchain presents. And then we talked about things like Bitcoin, we talked about decentralization, and all other things. So today we're going to be building upon that. So our next lesson for today is Crypto 102, which is another use case for Bitcoin. And it's a core topic that everybody likes to talk about. So we want to have a session on this and then see how best we can talk about this topic as beginner friendly as possible. I know most of us here are like some of us here are OGs. People have graduated. They are in a higher level. They are taking short and long and things. Yeah, but for the very beginners, we want to make this session very um, easy and friendly. So we're going to use the next 10 minutes. We spent a lot of time, so we're going to use the next 10 minutes to just go through this, and then maybe next week we'll continue from there so that we don't waste a lot of time. So basically today we're just going to touch on at least four models. So we're touching on four models, which is why we need to engage in trading and what trading is. And our next model will also talk about the types of trading and then the forms of trading. The types and the forms of trading. Let me just go back. The types and then the forms of trading. And then our next model will talk about the risks of crypto trading. Just like any other business, there's a risk involved. And then we talk about trading strategies. And then we talk about getting started, which is the practical session and then the core session. So in the next 10 minutes, we're just going to run quickly through this and then we'll continue from here next week, hopefully. So basically, what is cryptocurrency trading? So what we do here mainly at Hodlers Lab is crypto trading. We might be over time delving into other forms of trading, forex and indices, stocks, and all those things. But for now, we do crypto trading. So basically, crypto trading is just buying and selling of cryptocurrencies on various exchanges. So it's just buying and selling of cryptocurrency. So we're buying high, we're selling low. We're selling high, we're buying low. Just like that. That is all trading is all about. So if the price of a currency is $1 and in the next 5 minutes it goes to $1.50, and that 50-cent difference when we bought it, it's our profit. So basically this is what trading is all about. Trading is the general word trading, like buying and selling of goods, but crypto trading, just like cryptocurrencies are digital assets from the lessons we learned last week. And digital assets, crypto trading is basically buying and selling of these digital assets on crypto platforms on or crypto exchanges. So basically, we take advantage of the fluctuations, the up and down movements of the markets to make money, and then we use a lot of tools and a lot of strategies to do this trading. So why do we trade? Like, what are some of the benefits of crypto trading? So high volatility. The volatility in the markets, the up and down movement, makes us make profits or losses from the market. So this is one of the reasons why we trade. The volatility in the market helps us to make money from the market. Also, we have global accessibility. So unlike the stock exchange or any other traditional form of trading, typically the people who engage in trading are financial advisors, are big banks, and are major stock exchange brokers. I think there's a form of trading. I think it should be the stock trading or a certain type of trading. If you don't have $15,000, you cannot even begin that trading. But with cryptocurrency trading, it is very accessible to everyone. Very accessible to everyone. The barrier of entry to enter into cryptocurrency trading is very low. As little as $1, $2, $10, $15, $10,000, you can start trading cryptocurrency. And also it serves as a form of diversification. So maybe you have your funds in like the what's the name, the mutual funds. Maybe you are invested in stocks, maybe you're invested in bonds, maybe you're invested in other forms of investment packages that the traditional financial institution offers. But the cryptocurrency trading also helps us to diversify income. So we put some part of our income or some part of our monies into cryptocurrency. So basically helps us to diversify, and it's also an opportunity to learn. So if you want to be into the crypto space and be very active into the crypto space, trading, it's a very good opportunity for us to learn how to go about trading cryptocurrency. So just like um, let me also, before I move into forms of trade, let's just talk on the risks of trading. Any form of, just like any form of trading or any form of business. So trading is a form of business. Just like any form of business, it can have its good sides and it can have its bad sides. So we mentioned volatility as a good thing in which we take advantage of the price movement to make money. It can also be a bad thing or disadvantage or risk factor where we lose money because of the crazy up and downs of the market. Also, another disadvantage as stated here is regulatory uncertainty. So, like we all know, this past week has been crazy for a lot of exchanges. Cryptocurrencies are not regulated. Most of them are decentralized. Most of them are autonomous. You don't know the anonymous founders and stuff like that. So, regulatory bodies cannot control it. So, like we all know, these past few days we've been hearing a lot of SEC versus Binance, SEC versus Coinbase, SEC versus this, SEC versus that. Like these are regulatory bodies that want to control the space. They want to protect investors. They want to protect their citizens. Because cryptocurrency can be like a wild west. Somebody would call cryptocurrency a wild west, and these bodies want to make sure that cryptocurrency is safe for their citizens to participate in. So it's very risky in that aspect. Also, there's no investor protection. Like typically, if your bank collapses and your money is in the bank, you are sure that your money is backed by the government, and the government would always print the money. So you have that guarantee that if the bank collapses, you will not lose your money, because the government would always find a way to fix that and refund your money to you. But in cryptocurrency, once your money goes, your money goes. There's no protection. You can't go and hold anybody liable. You can't do anything to anybody. So investors protection is lacking in the space, and that's a risk factor. Also, we have a lot of market manipulations. I mean, this is a wild west, like I mentioned. So people do not necessarily play according to the rules. They manipulate the markets. They do as they wish. There's a lot of wild things that happen in the space because there's no protection and regulation and all of that. So also there's that factor where most cryptos are almost worthless. So things like shitcoin, things like meme coins, things like even some projects that people think are worthless, most of them are worthless because they do not have any form of value. Okay, you ask the project, okay, what does this coin do, or what does this token do, or what does this project do? Most of them do not have that value. They do not have any fundamental value backing them. So these are some of the risk factors that is involved in trading. So if you want to enter into the trading business or you want to go into trading, you should know some of these and know that, okay, if you put your money into an exchange, number one, the government is not backing it. Number two, there's no protection for your funds. Number three, there's a security factor where your money can be hacked on the exchange. Number four, the exchange can even collapse. We've all been at this past year or last year, we were all here, and then FTX collapsed. Like, no, everybody that had their money in FTX was wiped out. There was no protection, there was no security, things like that. Your money can be in your wallet, it's hacked, it's gone. You can't go and say, oh, you want a refund from anybody else. So these are some of the risks when you are going to trade cryptocurrency, and you should understand some of these things. So there are so many forms of trading cryptocurrency. Like, trading is broad and trading crypto is broad, so there are so many forms of it. I'm going to highlight some types of trading and then maybe talk about some forms. So we have spot trading, we have P2P trading, we have margin trading. So let me just quickly rush through it. Spot trading is basically buying on spot. So you are buying the currency most likely at market price, or you set a limit order, you buys it. You're actually buying the currency. You're actually buying the currency and you're holding it most likely for a long while. Yeah, so that's spot trading. And there's a P2P trading. P2P trading is just peer-to-peer trading. So a lot of these exchanges, whether DEXs or SEXs, they give us access to trade with each other without the need for any third party. So we transact with each other on the platform. So there's P2P trading. There's also margin trading. Margin trading is basically using leverage to amplify your position. So there's also futures trading. Futures trading is buying of contracts. We are buying contracts to actually participate in the market. So we're not buying the coin or we're not buying the token, but we're buying a contract of the token. So there's also options trading. Options trading is just time bound. So there are trades that have a time limit. So things like that. So options trading. There's also copy trading. Copy trading is a type of trading where we basically just copy the trades of maybe a trader or an analyst in the market. So they're all that trading. There's also algorithmic trading, which is like the bot trading. So there are trading where the bot does it for us. A lot of these exchanges, a lot of these dexes, they have bots where they do the trading for them. So basically there's a bot trading. And also a major forms of trading that we know, it's day trading, scalp trading, swing trading, intraday trading, and all of that. So day trading basically means that you are buying and selling the assets on the same day. You are not letting it go to the next day. You are buying and selling on the same day. Swing trading means they're holding the asset for a few days, for a few weeks, even sometimes for months. And then scalping basically means that you are entering and exiting your positions or your trade within very, very little time frames, 5 minutes, 2 minutes, 10 minutes, 3 minutes, that kind of a thing. So these are different forms of trades, and depending on the kind of when we go to having a trading plan, we'll look at your personality and the type of person you are and the kind of trade that you would want to participate in. So these are some forms of trades. So let's just move on to, like I mentioned, your trading strategy. Your trading strategy defines who you are as a trader, and it defines your goal and the things that you wish to achieve with trading. So before you even enter the trading space, you should ask yourself, okay, what am I willing to why am I going to this business? Why am I? And you have to have a plan for it. You have to have a strategy. So the first point here, when you're drawing out your trading strategy, is to have a defined goal. So like I mentioned, there are various forms of trading. There are different types of trading. There are various types of trading, like we looked at here when we were talking about the forms of trading. So you ask yourself, okay, what type of person am I? What type of personality do I have? What are my financial goals? What are my objectives? What kind of trader do I want to be? Do I want to be a swing trader? Do I want to be a scalper? Do I want to be an investor? Do I want to buy on spot? Do I want to do futures trading? So you have to know that for yourself, and you have to define your goal. Okay, am I looking to buy this coin and hold it for a long time? I think spot trading will be for you. Am I looking to buy this coin and then sell it within a day? You can probably do futures trading. Am I looking to just take advantage of the small movements in the currency pairs? You can probably do P2P trading. Like, there's a lot of ways that you can make money from trading, and these are some of the things that you have to define your goal when you are going to trading. Are you looking for short term? Are you looking for long term? Are you looking for investments? Are you looking for, what type of person are you, and what kind of goals are you looking to set for yourself when it comes to your trading strategy? Also, time frames are important. So like I mentioned, there are various types of traders, and the type of trader you are is based on your personality type. So scalpers are typically people who do not hold positions for long, like within 5 minutes they are out, 2 minutes, 1 minute. They enter the trade, they exit quickly, exit quickly. They are just scalping the market. And then we have day traders. Like I mentioned before, day traders, they typically would hold a position, or when they are in a trade, they would hold it for, like, say, a whole day, and just let it do its thing and then make money or lose money based on how the trade performs. We also have swing traders. Swing traders typically hold for a much longer time. So they hold for like weeks upon weeks upon weeks, and sometimes even months. So those are swing traders. And then we have the general investors. Investors are probably people that would buy for years. So you probably buy Bitcoin now. You're holding it for, like, say, in the next 4 years or in the next 5 years. You are not a scalper. You are not a day trader. You are probably an investor. So another important part of trading, another important strategy we have to put into place if we want to talk about trading, is risk management. So you have to know your risk tolerance. You have to know the kind of personality that you are. You have to know what kind of risks you want to take into the market. Am I comfortable putting this amount into it? How much, if I lose this trade, how much am I willing to lose? if I go into this market with this price, can I take the loss? All of these things are very, very key, very, very key things that you have to put into your trading plan when going into becoming a trader in the cryptocurrency market. Also, there's an emotional part of the market. The markets, like we know, it doesn't go up in a straight line. It goes up, it goes down, it goes up, it goes down. And the markets, the up and down, is controlled by human emotions of greed and human emotions of fear. So you have to learn how to work on your psychology and work on your emotional discipline. This is a very core part of trading. There's a huge school of thought that says that trading is just, or learning technical analysis of trading is just like some 10%. The rest of it is in your mind, your psychology, how you can control yourself. Am I a person that can hold a trade for a long time and not worry about a little movement in loss and a little movement in drawdowns and things? Or am I a kind of person that I can't watch my portfolio go red for even one day? Am I the kind of person that if I buy Bitcoin at 48,000, it comes down to 28,000, can I hold it, or I'll panic and sell at that 28,000 and lose? Not like lose and just get out of the market. I don't want to take further. Or can I hold Bitcoin from 40,000 all the way down to 16,000 to 15,000 and then watch it go all the way back up again? Like, you have to develop emotional discipline, and you have to work on your psychology, and you have to include this as part of your trading plan. Also, journaling and improving your trades. Like, it's important to know why you are buying an asset. It's important to put down the reasons why you're buying an asset, or it's important to know the reasons why you took that trade, why you went into that trade, why you did not take that trade. Like, you need to put some of these things down, and you constantly keep improving it. So, say for example, you journal a certain pattern you have seen that you constantly take in the market, and it works out for you. Every time you see it, you take it, it works out for you. Every time you see it works out for you. Maybe the one time you take it doesn't work out for you, you now look at your result and say, okay, I did this, I did that, and it help you improve upon your trading. So these are some key points where you have to include when talking about your trading strategy. So basically, let's not waste too much time. We're going to delve into the practicals of actual trading and the tools that we need to trade. So number one tool, we need to trade crypto, specifically crypto. We're not talking stocks, we're not talking forex or any of that thing. We're talking crypto. So the tools that you need to trade is a crypto exchange. So last week we talked about cryptocurrency exchanges as places where we buy and sell crypto. So you need to these exchanges provide the liquidity, or they provide the marketplace where buyers and sellers come and they come and trade. So you need a crypto exchange, and typically you need an exchange which is reliable. You have to do your due diligence on exchanges which are reliable, exchanges which have stood the test of time. Typically, like Binance. I like Binance a lot because, I mean, they are the biggest, they are the best, in my opinion. They are the biggest, and they have their own flaws here and there, but Binance is typically where I trade on. And there are other exchanges. There's KuCoin, there's Mexi, there's Kraken, there's Coinbase, there's Gemini. All of these other exchanges are there, but typically where I trade on is Binance. So Binance, for you to get started, you have to now sign up. You have to do your KYC. Last week we talked about KYC, which is knowing your customer. And there's an article on our website, Hodlers and Traders, and then where you can go on there, and then you would find articles where we talked about doing your KYC and stuff like that. So let me just share this tab instead. Okay. Can you guys still see my screen? You guys can still see my screen, right? Okay, so where we talked about, I'm just opening. You can go on our website. We have articles on there where you do your KYC, where you do your verifications and stuff like that. So Binance is typically the trading platform in which you use. Also, you need a cryptocurrency wallet. So the wallet is where you store your money. You store your money to trade. So basically, the exchanges typically provide you with the wallet. So most exchanges provide you with a wallet if you want to trade on. Or if you're using a decentralized exchange, you need a decentralized wallet to connect to the decentralized exchange. So for example, if you want to trade on PancakeSwap or Uniswap, you need a decentralized exchange like Trust Wallet or MetaMask Wallet to connect to those exchanges in order to swap your tokens or your coins and trade those for whatever coin you are trading for. Typically, also, if you are trading on a centralized exchange like Binance, you need to fund your wallet with, say, a US dollar or a Canadian dollar or Great British pound or whatever, and just trade that dollar for Bitcoin or Ethereum or Litecoin or Stellar or any other coin that you want to trade on. So basically, these are some of the things that you need. Also, you need market analysis tools. So basically, Coin Market Cap is a powerful market, what they call it, aggregator. It contains all the coins in the market, their market cap. It contains the total market cap of the market. It talks about every coin in the crypto space. Coin Market Cap has it. We don't have a lot of time. I would have just talked about it. I think my network is even acting slow. Even the website is not opening fast. So CoinGecko is another one, which is CG. CoinGecko is another one. Dex Screener is also another market analysis tool, mostly used for decentralized coins or shit coins and stuff like that. Also, another tool you need if you want to begin your trading is your trading view. The trading view is the analytical tool in which you do all your analysis, all your technical analysis. So some of these things I mentioned, first of all, say for example the coin market cap and then a coin gecko. These are the tools for doing fundamental analysis. And then for technical analysis, we're looking at trading view. So trading view is the charting tool in which you do your whole technical analysis on. You draw your chart on, you draw your graph on, you draw your map on, and stuff like that. And then you also need news sources, so credible news sources. You can use Twitter, you can use Coin Market Cap, Coindex, Cointelegraph, some of these big news crypto portals. You can even come on our website. We post a lot of content on there. So Hodlers and Traders.com. So basically, you also need to put in place your risk management. Like, it's important to talk about risk. Is important, but to me, risk in trading is more important than profit, because the risk, how you manage your risk, it shows how you would survive in trading. Whether you're an investor, whether you're a trader, whether you're a long-term scalper, whether you're a long-term trader, whether you're a scalper, a swinger, any type of trading you do, how you go about managing your risks is also. And trade management tools involve your stop losses. It involves your position sizing. It involves your take profit. All of those things, your long and your short tools. All of these things come into place when you want to go deep into tools that you need to get started with cryptocurrency trading. So because we lost a lot of time, I think we're going to go deep into the technical analysis of the market next week. So next week Sunday, same time around this time. Hopefully we come a little bit earlier and spend an hour, whole hour, go into the technical analysis and dive into trading view, which is our major tool for technical analysis when it comes to cryptocurrency trading. So I don't want to take too much time. This would be all the session for tonight. That will be all for tonight. Thank you guys for joining once again. I'll see you guys in the chats. So peace. We're out.